The Reserve Bank of India has cut interest rates in its monetary policy, but consumers are unlikely to benefit.
That's the sad bit of news that we are getting right now. Repo rates have been cut by 0.25%, by 25 basis points. It is at its lowest level since May 2011. But the RBI also warned that there's still little room for more rate cuts. Taking their cue from the RBI, most banks say they cannot cut rates further. Most banks saying that it will be difficult to pass the rate cut on. Here's what SBI is saying, that there is not much scope for rate cuts, at least for now. ICICI Bank also adding in, one of the largest bankers. They are saying cut in lending rates will mainly depend on the cost of funds. So indications that the cost of funds are still high. Axis Bank saying until cost of borrowings come down, transmission to consumers will be difficult. Punjab and National Bank also saying it's too early to say that worst is behind. So they're going to wait and watch.
Overall, the balance of risk stemming from the Reserve Bank's assessment of the growth inflation dynamic yields little space for further monetary easing. The Reserve Bank will endeavor to actively manage liquidity to reinforce monetary transmission.
Whether there will be a cut or not depends upon how the inflation tends to behave. I think the 5% inflation rate which is mentioned is a goal towards which the Reserve Bank would like to move.
If the inflation trends down further, that will decide the scope for further policy action. So let's accept what has been done today and let us see what the future holds.
Right, Shireen Bhan joining us with the latest. Shireen, while the banks have been cautious, saying that yes, we know that the cost of funds are high, so they cannot pass on this benefit to consumers. But wouldn't it have been, a sentiment boost if they had at a time when there is gloom all over?
Well, Karma, the point that we've heard from industry and from the government, the finance ministry, is that there is enough room at this point in time for the Reserve Bank to have been more aggressive when it comes to actually cutting rates. In fact, that was the hope in the market till 24 hours ago, till before the RBI released its macroeconomic review. The expectation was that the RBI would cut repo rates by at least 25 basis points and would also follow through with a 25 basis point cut on the CRR, which means that there would have been more liquidity in the system, which means the transmission probably would have been easier and we would have actually seen that transmission and the end result for the consumer coming through. But that did not happen, and the Reserve Bank has very clearly sounded a hawkish tone, not just in its credit policy today, but it gave us an indication last night when it released its macroeconomic review, reiterating that there is very limited room for further monetary easing. There is a huge disconnect between what the Reserve Bank seems to be saying and what the government seems to be saying when it comes to GDP growth projection. Look at where that disconnect is. The government says they expect FY14 GDP to grow at between 6.4 to 6.7%. The Reserve Bank says no way, we can grow only at about 5.4% for FY14. So there is that disconnect between what the Reserve Bank is saying, what the government is saying, and moreover, the government believes that, given the fact that current account deficit has eased because we've actually seen oil prices coming off, we've seen gold prices coming off, and the space is better for the Reserve Bank to maneuver. But the Reserve Bank certainly seems to be saying at this point in time that it needs to continue to be cautious. It needs to maintain a tight leash on the situation because they believe that inflation could perhaps become a challenge. It continues to be above the Reserve Bank's comfort zone, above 5%. So they believe that inflation does have upward risks, and hence the Reserve Bank doesn't want to ease too much at this point in time. It's wait and watch. Remember, the next policy is up in June. The Finance Ministry has made another plea to the Reserve Bank saying that we believe the time has come for a more aggressive rate cut. But as you heard from the bankers there, for now it seems to be wait and watch.
So Shireen, a quick one for dumb people like me. Should I now expect my interest rates on home loans not to come down at least for another 6 months? Is there any hope at all?
Karma, I think if there is another rate cut in June, perhaps we will see the banks being able to pass this on to consumers. State Bank of India is the most vociferous in this battle, saying there needs to be a CRR cut. So if you have an account with SBI, I think your wait is going to be longer. But perhaps some of the other banks may follow through. But at least till we see another rate cut coming in June, perhaps it is going to be a bit of a wait.
Right, Shireen, thanks for that update. We'll continue, of course, to track that story and maybe get you some good news on that front.